Hey, what's up? It's your boy Matthew Michael, and today I'll be sharing 6 tips to invest successfully on Robinhood. If you're new here, please subscribe and hit the bell icon so that you don't miss any future content or giveaways. And if you like this video, be sure to give this video a thumbs up so that I know to continue posting content like this. Alright, before we get into today's video, if you use the link down below in the description to sign up and create your Robinhood account, you and me get a free stock. Thank you in advance. You're welcome. The first tip to being successful in the stock market is to set goals. If you don't have any goals, you don't really know what you're working towards in the stock market, and then you're just investing without a purpose. And if you're investing without a purpose, there's no direction for your account. So you definitely want to have like a yearly goal, but within that yearly goal, you want to break it down into monthly goals. I also have a goal for how much I want to hold in each company. Right now, I personally have a goal set for each company I own to get 100 shares of each company that I have. This is something that I'm doing long term because the companies that I own are not cheap. You know, companies like Apple, companies like Tesla, companies like Walmart, their stocks are not cheap. These are nice blue chip stocks, so I would love to have 100 shares of or more. But right now, I'm shooting towards that 100 just to give me something to shoot for and to keep me focused. So it's good to have a long-term goal to keep you focused and to keep you under control. Tip number 2, know your risk tolerance. Typically, the younger you are, the higher your risk tolerance. I'm 22, so I have a very high risk tolerance. But if I had a family or if I was married and I had other people depending on my income, then my risk tolerance would be a lot lower. So these are all things to consider investing in the stock market, so you want to know your risk tolerance. And if you're older and you're watching this, you probably have a lower risk tolerance because you're probably coming up closer to retirement age, so you want to invest in more mutual funds and bonds. Typically, the older you are, the more mutual funds and bonds you want to invest in, and typically the younger you are, the more risks you can take picking stocks. So yeah, tip number 2 is know your risk. Tip number 3 is buy over time. Like I said earlier, I have a goal to buy 100 shares of each company, but I don't want to buy it all at once. Even if I can buy it all at once, I don't want to, because you want to buy to own the company, and then over time, as you're watching it and you see it dip, you want to buy it when the price goes down to lower the price, the average cost of the stock. This is called dollar cost averaging, and this is how most people actually end up getting up on their money. Because it's immensely difficult to time the market. It's very unlikely that you'll be able to buy right at the bottom. So it's good to just, whenever it dips, just to buy a few at a time. So yeah, that's tip number 3. Buy over time and not all at once. Tip number 4 is plan for panic, because the stock market, you never know what's gonna happen. Word on the street is we're actually due for another stock market crash pretty soon. So it's always good to have money on the side. You wanna make sure you're not investing all of your money. Maybe start with like 10% and have money on the side, so if your account goes down, if your portfolio goes down, you can either buy more or you have money to support yourself as well. You don't want to go all in on your portfolio. You only want this to be part of your wealth. So that's tip number 4. Alright, tip number 5. Tip number 5 is to diversify your investments. So what this means is you don't want to put all your money in one company, because if this company dips, that's your whole portfolio. If your portfolio is diversified, this allows one company to dip, one company to go up, and this creates a good balance across your whole account. It's good to be diversified so your portfolio doesn't take any major hits. And that is tip 5. Alright, tip number 6. Tip number 6 is to smash that like button. Alright, but for real, tip number 6 is to control your emotions. The stock market goes up and down just like life, and it's important that you have control of your emotions when trading in the stock market, because you don't want to sell just because it goes down unless it's just going nowhere. You want to hold on to that stock so that it can rise back up. If you're really emotional and your stock goes down one day and you sell it, and then the next day it goes back up even higher than it originally was, that's going to destroy you even more. So tip number 6 is to control your emotions. So control your emotions, and in turn your money good. Thanks guys for watching my video. If you haven't already, please be sure to subscribe so that you don't miss out on any future content or giveaways. Be sure to hit the bell icon. I post new videos every week. And leave a comment down below saying, hey, what's up? I'd love to talk to you guys down below in the comments. And don't be greedy. Share this video with your friends, family, and loved ones. I hope you have a great day. Peace.